Okay, I'm going to go over this chart using the Wyckoff method. Um, I actually traded this and got out about here. Went a little higher and then it broke on 62 volume. The key is the follow through. The follow through here is very bearish. I told you that at this point that we're in a downtrend. When the 62 came down and further came down with 47. When you have high volume down waves, the confirmation of any high volume up or down wave is when it has a breakout higher or lower. In this case, it was a down wave, and this is the breakout lower. So at that point, it was ready to. At this point, when it breaks the 100-day average or 100-bar average, you could sell. And if you sold at ICE or whatever, you got a nice move. But in the meantime, what was going on was reaccumulation. How do you know that it's reaccumulation? Well, what do they have to reaccumulate? They have to reaccumulate the contracts, and how you would do that is by checking the numbers. Over here, you have 62 volume down. That's the highest volume. Over here, you have 74 volume up. Immediate red flag. Immediate red flag if you're looking for shorts, because the up volume shouldn't be higher or even equal to the high down volume, which is a change of behavior or sign of weakness. This was they absorbed or reaccumulated. Then there's a 45 drop, and then there's an 88 right away. I mean, it's known at this point that it's reaccumulated because of the volume. The volume is telling you all you need to know regarding the reaccumulation. 62, 74, 47, down 45, 88, boom, just absorbed. Then finally what it did was drop on 62. So again, cause for concern. But if you see what happened, it dropped 62. It's above the low bar and it sprung. Now how do you know it's legit? How you know is because there's a thrust afterwards. Not only is there a thrust, but there's follow through afterwards. This together, even though you see a high volume down wave, has got you thinking, what? There's a thrust right after. If it was a correction, should it look like that? This thrust rivals this thrust. So then you have a follow-through bar, and still, it's understandable. You don't really know whether to go short or long because of this wave. Understandable. Okay. You have a thrust. You have a follow-through. You have lack of demand. Very important to understand that there is a lack of supply. That lack of supply is saying a lot. But again, it's one bar. So let's see what about the next test? This one here confirms without a shadow of a doubt there's no supply left. There is no supply left. When you have one and then you have the other. But still, if I'm looking at this, I'm still like, what about red, 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 and red? So what changes the sentiment is when you have the lack of supply and then you have this bar. Typically, what happens after lack of demand or lack of supply, is a markup bar or a markdown bar, which is nothing more than a bar with a big range. This is that bar. This is the trigger. This is the signal. This is the confirmation. This is telling you what to do. After this, there's no doubt. Well, there's always a little bit of doubt, but your level of confidence about the trade should go up after that bar. You know? Now you realize, by the way, what's really going on, even though this is a high 62 volume wave, you know, and it's all red, really what's going on, if you think from a perspective of the CM, the Wyckoff CM theory, typically what happens is there's a shakeout before an up move, and what's going on is you have to ask yourself who's selling. It could be small hand, you know, weak hands or strong hands. If it's weak hands, meaning if it's the public or funds and specs or whoever, if they're selling, guess who's buying? Is the CM, composite man, Wyckoff composite man theory. So the point here is that all of this selling is being sold to somebody, and that somebody is buying all of this. So he bought 88, and when some other whatever dropped 62, this guy could have absorbed this. That's why, you know, you have to think from multiple angles here, but you really don't know. All you know is that typically after a volume accumulation, there's a shakeout. Okay, and so you understand what to expect and when to expect it. So then it makes sense, and it'll help you not be confused, because shakeout, I mean, look what this did. It just did a spring. That's exactly the purpose of it. This is where the stops are going to be placed. If you're long after this, you know, higher high, people are going to go long. They're going to buy this breakout, put the stop over here, get stopped out. Anyway, so after this bar, this was the markup bar, you know, with the thrust. Now, how do you know how do you buy this bar? And where do you put your stop? After this bar, I like putting the stops under lack of volume. So right here, you have the 12. Right here, that's where you put the stop. Where do you put the order? You can put it above. Right on top of this red bar, below the little green bar, you put the stop. So you have a nice little low risk entry. Stop, entry. Stop here, entry here. After this green bar, and they actually test, gives the fill, and you get some markup. And what's interesting is what happens when it goes up here is interesting, because it goes up on 19 and then pulls back and retests. The retests are absolutely critical, because the retest has 12 volume, which tells you there's a lack of demand. Like over here, explain there's a lack of supply. Lack of supply, thrust. Here you have lack of demand, thrust. It's kind of like the same thing. This over here was selling weakness. Over here is buying weakness. And it did a shortening of a thrust, meaning it goes up a little bit but can't really follow through. And what happens after is saying a lot. It's saying that there's a lack of demand, shortening of the thrust. You know, a lack of demand, shortening of the thrust, and there's a thrust after that, down thrust. Okay, now after that it tries again, and again the thrust, the ability to go higher, is very limited. This is a certain concept. It's called a buying climax. Buying climax is ending action, meaning the trend is done. In this case, the uptrend is done. Now, it doesn't look like a typical buying climax, has much more volume, but for experienced traders, they know that this is it because it's like an attempt to go up on whatever volume they can muster, which is usually higher than the prior volume, and has at least 3 bars. So we could tell, boom, 1, 2, 3, and no go. Then it again tries and retests. Lack of demand on the left side, lack of demand on the right side, and look what's going on. Lack of demand, thrust. Lack of demand, thrust. Here, lack of demand, thrust, follow through. Here, you're getting lack of demand, thrust, down thrusts. I have a climax, ending action. Lack of demand, thrust. Excuse me, I may have said lack of demand, but it's really lack of supply. Lack of supply, thrust. Lack of demand, thrust down. Lack of demand, thrust again down. Which is telling you that this is distribution. Because they keep trying to go up, and this guy, the smart money's selling. There's just not enough demand to override, to go through. Finally, again, you have the green bars, and there's only one of them. And this is, again, in some way, shape, or form, before the market goes down, expect a shakeout. There's almost all the time, or a lot of the time, there will be a shakeout. The same concept, it looks different, but the principle is exact same. You have this all green and green breakout, and what do you have? A shakeout. That does what? It penetrates the low. Over here, this shakeout penetrates the low volume area, the highs of the low volume area, to take out the stops. It looks a little different, but if you think from a perspective of principles about what a shakeout is a stop run prior to the market moving in a particular direction. Here you have the stop run, that makes everything look bearish, and then there's a run. Here you have a stop run that makes things look bullish, like it's coming back, but it doesn't. So you have to understand the purpose of a shakeout and when to expect it. The key is understanding all of this data over here. Understanding all of this data. Okay? After you understand all this data, you're expecting the market to be weak. And in your mind, you will expect, that a shakeout can occur. So a shakeout occurs, but the key here is the breakout bar. Over here is the markup bar. I'm not sure I don't know if this is the markdown bar and whether there's going to be massive markdown, but a bar like this is not normal. The range is just too big. So we'll see, because this bar is abnormally large. I can understand a bar like this, a bar like this, but a bar like this, yeah, I don't know. This is a very strong bar, and we'll see what happens. And the thing is, you have a range before that bar, so you have the quote-unquote cause, and then you have a markdown bar. Do I think that it'll go down a lot? I don't think so, because even though the shakeout, whatever markdown bar, whatever you would call it, is big, I'm not 100% convinced yet, because the selling volume, the distribution volume, was only 37. You know what I mean? I want to see heavy volume here. This volume is heavy, but not really as heavy as 62, 74, 88. You want to see heavy volume. Now I could be wrong. It could go straight down. I don't know. All I know is this volume should be more for a real distribution to occur. There should be heavy volume. So I think this is kind of because the contract is rolling over. So they want to just roll over on Friday. Anyway, so this is a crack. Supply is in control. Now the question is, how do you trade? Right? I mean, that's what it comes down to. Where do you put your stop? Where do you put your entry? Clearly, I explained over here that you do it after a thrust. This is a thrust. How do I know it's a thrust? I just look for the indicator. Put it over a certain amount of ATR, average true range. You got big bars will come up as green. Big down bars will come up as red. Anyway, so over here you have a big red bar. As soon as you get this bar, it's on a sell signal. Okay, that the trigger is a thrust. The buy or the sell trigger is a thrust. Obviously, it matters what happens before the thrust. A thrust by itself is meaningless. High volume by itself is meaningless. Low volume by itself is meaningless. But when you have the combination of the three and think in terms of supply and demand at a top within a range with a buying climax, lack of demand, shakeout, thrust, then it becomes together. All these concepts become meaningful. So you don't just see a thrust and go sell. That's why these mechanical systems, they need to be verified by human eyes. Otherwise, okay, they suck. So these thrusts here is your signal to go short. Now, where do you go short? Ideally, you want the smallest risk, and I want to go short over here, like where it says at 25. Right there. It didn't go that high, but where it did go was to test the breakdown against this area. Alright, now it got tagged over there, and now it's dropping. Okay, so right now the bears are in control. We'll see what happens after contract rollover. And these are the concepts in Wyckoff. The concepts that we went over was reaccumulation and how you know there's reaccumulation. The importance of having lack of demand and then a thrust with accumulation in the background. That will cause markup. The idea of a buying climax as ending action in other markets, sometimes it looks different, but it fits the bill of the climax. 3 bars is strong volume, relatively strong volume, up thrust over here. The concept of lack of demand, and the importance of a thrust after lack of demand, because how you read this is the weakness in one is leading to the strength in the other, meaning a weakness in demand, which is identified by lack of demand, is leading to strength in supply. Weakness begets strength. Weakness in demand begets strength in supply. Weakness in supply begets strength in demand. Why? Because traders see that there's no supply, so they buy. They see there's no demand, they sell. So that's what's going on. And then finally, the importance of shakeouts, and not to be confused by shakeouts. In fact, expect a shakeout before any major move. There's typically a shakeout. Before any major move, you will find a shakeout. And the importance of waiting for the thrust, and then going long or short. So you don't play the game over here, because very likely you're going to get shaken out here or shaken out here. What you wait for is a lack of demand and then the thrust. Demand, lack of supply, then the thrust, lack of demand, then the thrust. Then you know that the market has what I call proved itself. You never anticipate a move. You always let the market prove itself. After it proves itself here, you can take the long entry here. After it proves itself here, you take the short entry. I would have done it here, probably missed the entry. But if you're, you know, have more sense than me, you put the order right here and get the short entry and got over 100 ticks. Then again, it's Friday, so whatever. So this is the Wyckoff analysis on the YM on the 10,000 tick chart. All right.